Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the open. Coming up, we're watching that CPI number for you, also jobs and the Middle East tensions, plus oil as well on deck. We've also got Delta Airlines results. Its quarterly profit topping estimates, but it's trimmed its outlook. We'll get the share reaction for you in just a moment. And Birkenstock stumbles. The German sandal maker sees its shares fall after its market debut. Now, good afternoon. Welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading. However, we've just got breaking news just crossing the headlines right now. CPI number we were looking at for 0.3% month on month, but we in fact got a slightly higher number, 0.4%. On the year-on-year figure, we were looking at for 3.6%. We got 3.7%, so also slightly higher on the year-on-year figure. Let's have a look at the volatility index first. Currently not much of a reaction. That's the hourly chart for you. In fact, if anything, it's tipped just a touch lower because it was at 17.8 just before this. Let's have a look at the dollar to see whether there's been a reaction there. The dollar on the hourly chart is actually tracking just a touch higher, but not a huge amount, it has to be said. Let's cross over to IG's Jeremy Naylor now. Jerry, seeing any reaction on the markets? What do you make of these figures?
Well, I make of the figures, as you said, really, we have seen a little bit more in terms of over the consensus, in terms of that inflation rate year on year. Core inflation, though, coming in 4.1%. This is down from 4.3%. I think this is key. And we've seen a reaction in the market. I just want to quickly show you what's happening in terms of the individual candles. This is 1 hour chart candles, charted candles on the S&P 500. The vertical dotted line we did with you yesterday, showing you where the close was yesterday. We're absolutely on yesterday's close at 43.85. So I can't see any change in the market on from the cash close last night. This has been the progress overnight. This is the candle at the moment we're witnessing on the way down. Let me just turn that into minute by minute candles. You can see the market reaction is here. I can't really see too much difference coming out of expectations for interest rates from this number. In terms of the longer term, the daily chart, again, talking about this yesterday, about this Fibonacci, we're right up against this line of resistance. And we've just, in today's session, we have peeked over it, albeit briefly. But I think this area between 43.94 and 44.40 is going to be difficult to get through. And I think if it does pass through there, if you see a candle close beyond the 61.8% retracement, then that will be your next price target, 44.40. Then I think there's an opportunity potentially here to sell the market. There are other things that the markets are waiting for, but at the moment at least, that's the movement that we've seen on the S&P 500. US tech market, same sort of thing. If anything, a little bit of air taken out of the tires just ahead of the open at the moment. We are now down on yesterday's cash close, but only by a very, very small margin. But it has to be said, you've got to see this trend that we've seen in place over the last week or so on the upside. So it is just a little bit of a retracement in what has otherwise been a relatively good trend on the way up. And with the backdrop of the geopolitical increase in geopolitical political concerns, I think this is something else that we have to consider. This is the Dow. If anything, the Dow is better off than we were slightly earlier. So my interpretation from this, Angeline, is that we've got the markets where we're seeing the most downside is coming through from tech stocks. Tech stocks are leading the S&P 500 lower. The Dow, which is old type of stocks, is seeing a gain at the moment. So I think that's the way the Wall Street's going to trade at the open. Gains for the Dow, potential losses for the S&P 500, and we're down a little bit on the NASDAQ close last night.
And Jeremy, as you rightly said, the market is looking at many other factors as well. We've got, of course, the ongoing situation in Israel. We're also about to be hit by a wall of earnings. Where are we likely to see the most volatility?
Well, I think you've mentioned the two things that are now occupying minds of traders. Let's take that first point about what's happening in Gaza, in Israel, on from the attacks last weekend, and what's going on. The United States has said, or Biden has said, he doesn't want land troops. but he is bolstering some of the military hardware around the region. And I think this is a sort of a mindful act for Iran, just to show the United States is interested in this, but at the moment they're not actually doing anything. And there's no real impact on the market, I don't think, at the moment on anything that's happened in the last 24 hours or so. If there is an escalation, then it does broaden, and we do see oil prices move on this, and we do see the need for ground troops, then I think obviously all bets are off in terms of where we go on the markets. People will go into safety. They'll be buying US bonds. That'll send treasuries down. We could well see some money going into gold. But the other thing you mentioned is the earnings out tomorrow. Absolutely key. Now, from this number, we were talking yesterday about inflation being a really big pivot point potentially for the week. Doesn't look like that's going to happen. Tomorrow, we have the real full on-blast start for earnings with banks, United Health, another one. These are all session stocks. They're all reporting before the bell tomorrow. And I wouldn't mind betting this time tomorrow when we talk, we'll have something more to talk about and something more for traders to bite on as we go ahead to tomorrow's trade. At the moment, not much move in the markets on from that inflation number.
Thanks very much, Jerry. We will be checking in with you when we get those earnings through. I just want to reiterate for all our clients joining at this point, we had a slightly warmer than expected figure for the CPI number. The data comes after stronger than expected producer price index data for September. Just checking on the US dollar basket here because it is creeping higher, as you can see there on the hourly chart on the IG platform. Perhaps given the two warmer than expected numbers for the CPI and the PPI, perhaps the thought process behind that for the dollar anyway is that it keeps the door open, the Fed's door open to maybe potentially another hike. We also have had some other details come through. This is the weekly jobless claims, and we were expecting 210,000. We got 209,000, so slightly lower than expected, indicating the labor market is still really robust in the US. Now, we're also waiting out for some comments coming in from Raphael Bostic and the Boston Fed President Susan Collins. They will be speaking later in the session, and this could give our traders more insight into what the Fed is going to do in the coming months. Meanwhile, I just want to show you Delta Airlines because Delta is an all-session stock on the IG platform, and it is heading higher. Looking at these hourly candles there, this is after the airline upped its, well, it trimmed its full-year outlook. But what's interesting is that it did report stronger demand, and it looks like investors are paying more attention to that and the fact that it managed an adjusted profit of $2.03 a share. This is for the third quarter, which was higher than expected. The company also said that demand for overseas trips has remained strong through the autumn season. However, as I mentioned earlier, we are keeping a close eye on the developments in Israel because it's not just Delta, but many other airlines too that have actually said they are halting flights to Israel. And of course, all this matters because if it does spill over, if the tensions spill over to oil producing nations and that bumps up the price of oil, then it could have downward ramifications for airline stocks. Meanwhile, Walgreens is another one that we are looking at for you because the company has reported Q4 adjusted profit of 67 cents per share. That was below expectations. Now seeing 2024 profit below estimates as well. And this is because there's less uptake on things like COVID vaccines, COVID tests, and treatments too. Now, the company also one to watch because it just announced a new boss in the previous session. After the closing bell last night, we also had Microsoft announcing that it has received a tax bill from the US Treasury for $28.9 billion. That's right, $28.9 billion. So Microsoft, I'm just getting the shares up for you, is another all-session stock on the IG platform. Here you go. That's the hourly chart. Now, the figure, which Microsoft disputes, stems from a long-running IRS investigation into how Microsoft allocated its profits among countries and jurisdictions in the years 2004 to 2013, according to a securities filing. What's also interesting is critics of the practice known as transfer pricing argue that companies frequently use it to minimize their tax burden by reporting lower profits in high tax countries and higher profits in lower tax jurisdictions. Microsoft says it will be making an appeal against the decision, a process expected to take a few years. The tax bill of $28.9 billion should be seen in the context of Microsoft's market cap as well of $2.5 trillion and $111 billion in cash as of June this year, according to the company's latest declaration. Now, one other story that is developing are the strikes in the US. The United Auto Workers Union has expanded its ongoing strike by shutting down Ford's biggest plant. Just checking on the all session stock for you. Ford there, as you can see, has had quite a volatile time. The strikes have been continuing with no end in sight because there's no deal just yet, and it has started impacting the stock, and there are now concerns that it could also start denting US GDP numbers. The UAW said 8,700 workers walked off the truck plant in Kentucky. This was in response to Ford refusing to move further in contract bargaining. It's a sharp escalation of its strike against Ford, GM, and Stellantis, which began last month. The UAW is pressuring car makers to grant higher pay and make other improvements in new labor agreements. And more signs that investors remain cautious about new listings. I just want to update you on Birkenstock. The company, of course, debuted, but the shares ended more than 12% below its IPO price, marking the worst debut by a company worth more than $1 billion in nearly 2 years. This is according to numbers from LSEG. Now, this perhaps gives us a better sense of the mood music in the IPO market than Birkenstock itself, because if you remember, Arm Holdings, Instacart, Klaviyo, all of them have seen their shares falling since listings. And out of Europe, in fact, Renke Group has postponed its IPO. We'll be keeping an eye on the other IPOs in the pipeline for October to see whether those get pulled as well. Now, the International Energy Agency has cut its forecast for growth in oil demand in 2024. This suggests that harsher global economic conditions and progress on energy efficiency will weigh on consumption. For more on the oil price from a technical viewpoint, we're joined by IG's Sean Morrison.
Oil prices have been very volatile as of late. Obviously, the onset of a war, which is now 6 days in between Hamas and Israel, has created that volatility. When you look at the chart, you can see that the price of Brent crude gapped significantly higher. Since then, we saw a bit of a pullback yesterday. Now, that pullback marks comments from OPEC Plus, or Saudi Arabia in particular, a major oil producer, that they would step in to support the market if was needed. But that conflict risk still does threaten oil prices at this point in time, and we are seeing a price higher today. And obviously, oil feeds into the inflation theme in global markets as well. From a technical perspective, we do see a stronger close on today's candle as it lies right now, so above the halfway mark of that preceding candle. And that would suggest that we could see some continued gains in Brent crude, and if we get above that $87 per barrel mark, it does put $89.10 per barrel as our next upside target. In the event that situation does arise, traders might consider using a close below that reversal low or that gap support somewhere between 84.50 and 84.75 as a stop loss indication for the trade.
Thanks very much, Sean. Now, before we go, a last look at how the dollar is looking, because we have seen a reaction on the markets after that CPI number. US consumer prices increasing in September amid higher costs for rent and gasoline. Underlying inflation is slowing, I might add. However, on a year-on-year figure and a month-on-month figure, we are seeing an uptick, much like the PPI. And of course, with violence in the Middle East and also concerns about disruption to oil prices, and a still tight US labor market. This all perhaps suggesting that borrowing costs in the US could remain higher for longer. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insights, do follow me on Twitter at Angeline Ong. This is IGTV.